traders and investors. Bennett Tyndall with tradinganalysis.com. Today is Thursday, April 22nd, 2021, and this is your weekly public market update. So a few weeks back, we had a discussion on our TA Live Wednesday show talking about the fact that oftentimes those who are new to the world of Elliott have a tendency to become overly focused on what the higher degree wave count is while failing to recognize smaller degree patterns that are absolutely tradable. And a fantastic example of that can be seen in the chart of the S&P. Going back to the COVID low, the March 2020 low in the index, the wave count off of the March low is a bit subjective. And what I mean by that is there are a few valid wave counts as per the guidelines and the rules of the Elliott wave principle. We see a motive impulsive trend originating off of the March 4th low. So a 5-wave trend establishing advance off of the March 4th low that we anticipate coming to completion into the summer to set us up for a more traditional corrective pullback. What do I mean by more traditional? Anywhere from 10, maybe even 15% could be seen going into the summer. As you all know, summer often brings very lethargic, low volume trading. Off of the April 16th high in the S&P, we had a pullback into the April 20th low. This move unfolded as a 3-wave measured move. So this goes back to the conversation that we had with Todd a few weeks back as well on the live stream. And when discussing the subjectivity of the wave count off of the March low, his takeaway was, look, we're still seeing 5-wave trend establishing moves to the upside, and we're still seeing the counter trend corrective pullbacks, i.e. 3-wave moves, to the downside. 3-wave decline, 3-wave decline, 3-wave decline. We continue to see 5-wave rallies met with 3-wave pullbacks. So we see this 5-wave trend completing regardless of what the higher degree wave count is. Where are we within this trend? Well, let's get into it. Off the March 4th low, we rally up in 1. We pull back in wave number 2. Wave number 2 was a perfect 50% retracement, and it was also a spot-on measured move correction. From there, we move up in a smaller degree wave 1 and 2. So this is the structure of wave 3. Again, we're looking for a 5-wave substructure inside of this higher degree third wave. We rallied up in orange wave 3. We met the 161% objective compared to wave number 1, and we came just shy of 200%. We are then met with a directional 3-wave pullback from April 17th into April 20th. That was another 3-wave measured move, the low being 41.1838 versus 41.2358 being a perfect measured move. We, from there, believe it or not, have a 5-wave rally on the 15-minute chart inside of this blue wave 1. Today we had news out of the White House from President Biden. Was met with some intraday selling as well as some intraday institutional participation on that downside move. Now, we didn't meet the 1618 upside objective here in wave 3 as compared to wave 1. So we see this particular count as one of two ways. Either we just completed orange wave 4. This is 1 and 2 of this higher degree orange 5 of green number 3. Notice we have confluence of fib targets offered between 42.51, which is equality of wave 5 compared to wave 1. And we also have the 61% relationship of 5 compared to 1 and 3 at 43.37. And smack dab right in the middle of both of those is the higher degree 1618. So if I click on this 5v1, you'll see it references the orange degree of trend. If I click on the 618, orange degree of trend. If I click on the 1618, that shifts to the higher degree. So there's your major clustering of Fibonacci resistance in the S&P. Is this simply a 3-wave intraday shakeout and we're resuming higher? Quite a possibility. What's the alternate in the event that we break through 41.18, which was the origin of blue 1? Well, If we do break through 41.18, we will have no choice but to view green 3 as having come to completion on April 19th, and that then puts us in green wave number 4. Thanks to the powers of motive wave and tracking multiple wave counts, I can quickly take you to that example, as you can see here in front of you. This would be down in A, this would be up in B, and this would take you potentially all the way down to 40.5. So if we break through 41.18, wave count invalidation, which says we're continuing higher, we'll be referring to this interpretation, which says wave 3 completed. We're in wave 4, and that's going to pair up to this wave 2 pullback. This gives you 40.54 as equality of wave 4 compared to 2. This also happens to line up with a 38% retracement. So 40.54 up to 4100, it's fair game in the event we break 41.18. Now, once this fourth wave comes to completion, be it into the next few trading sessions and into next week, or if we just continue rallying higher, we anticipate a breakout to follow that will at the very least retest the previous highs, because remember, fifth waves can be truncated, and that simply means they end prior to the high of the third wave of the same degree. So post fourth wave, you should at least expect a retest of the previous high, if not an all-out break through them. From the S&P, let's visit the Nasdaq 100. Taking a look at the Nasdaq 100, we have a very similar wave count at work. Either we are in the higher degree fourth wave to pair up to this wave 2, which gives you a 13,422 up to 13.5 target completing between April 28th and May 5th. Or if we are to hold support and turn higher, we're still in the third wave with an upside objective at about 14.3 to 14.5. That's it for today's video. I hope you enjoyed the session. You can check us out at tradinganalysis.com. And as always, if you do enjoy the content, please give it a thumbs up. Subscribe with notifications to stay up to date. If you change your mind later, you can always unsubscribe. Thanks again. We appreciate your support. I'll see you guys on the next video update. Take care.